What's up guys, welcome to the door number 5 of the finance calendar, where we dive into 24 financial ratios in 24 days. Don't forget to subscribe so you don't miss any of the ratios, and let's go! Today we are going to talk about dividend yield. It shows us how much a company pays dividends relative to its stock price. It is simple to calculate, you just divide the annual dividends per share with the price of a share. Let's take a look at a couple of examples. To calculate the dividend yield, we have to find out how much dividends the company is paying to its owners. To do this, we can simply use some finance websites or usually the company's own website. For publicly traded companies, these are easy to find online, but if you have to calculate these by yourself, I'll leave a link down in the description where it is shown how to do it. But in short, to calculate 2020 dividends paid, subtract 2020 net income from 2020 ending retained earnings. If this number is different than the 2020 beginning retained earnings, the difference is the amount of dividends paid. For dividend yield, we can use different dividends. We can use last year's dividends paid, trailing 12 months dividends paid, or estimate the future dividends. You can see that Intel paid $1.32 dividends per share last year. The price of one Intel stock is $49.25, so the dividend yield is 2.68%. It is more common to use the trailing 12 months, TTM, and to calculate that, you just have to use the dividends for the past 12 months, in this case from December 2021 to December 2020. You can easily see these on Nasdaq. For example, during the last 12 months there have been 4 dividend payments that equal to $1.39. The dividend yield is 2.82%. You could also estimate the future dividends. To do this, you have to analyze the company by using things like annual reports, news, and many other things. A company could have also announced that in the future their plan is to increase dividends by X amount. Let's say for example, and to be clear, this number is taken out of nowhere, let's say that after analyzing all the available information, we come to a conclusion that Intel is going to pay $2 dividends per share next year. This would mean that the dividend yield is 4.06%. Now that we know the different ways to calculate the dividend yield, let's take a look at what dividend yield tells us. First of all, it tells us what is the return for the investment if we are considering dividends only. If the dividend yield is 5% and your investment was $100, you will earn $5 annually if we are only considering the dividends. If the yield is 2%, you will earn $2. This might make it seem like the higher the dividend yield, the better. This isn't always the case, and you shouldn't just look at the dividend yield ratio. A high dividend yield could mean that the company doesn't have any growth plans and prefers to give the investors the money. Or the company could be using the retained earnings to make the dividend yield higher, while the current returns actually aren't that good. So when you are comparing two different companies and dividend yields, think about the future of the stock price too. Let's say that company A has a dividend yield of 5% and company B has a dividend yield of 2%. Now you might think that company A is better, but in fact, company A has not made a profit for 2 years. They also don't have any plan to grow in the future and are using retained earnings to pay the dividends. While the dividend return is high, the price of the stock is going to go down, so the total return won't be that high. Company B, however, is only paying dividends from its current earnings. They have a great plan to grow in the future, and they are keeping some of the earnings for these future investments. In the future, the company's stock price is going to rise, meaning that the total return will be higher. Because of this, you should also take a look at the dividend payout ratio, but more about that in the future doors of the calendar. That's it for today's financial ratio. Hit the like button if you found this video helpful, and make sure to subscribe so you don't miss the rest of the financial ratios like the dividend payout ratio in the future. Have a great day, and I'll see you tomorrow. Bye!